CSX turning into a big story today after cutting its outlook, reporting a revenue decline of 1% in Q2. Our Morgan Brennan talked to the CEO and has a lot more for us. Hi, Morgan.
Hey, Carl, that's right. I did. I spoke to CSX CEO Jim Foote just a short while ago. Here's the takeaway. Cautious. So on the earnings call, Foote saying that the present economic backdrop is one of the most puzzling he's experienced in his career, which really says something since Foote has been in the railroading business for 4 decades now. I asked him why, and he said, normally you can see what's changed in your outlook and see why, but in this current environment, in the merchandise segment in particular, it's really a slow drip where everything just continues to shift further down. Now, he says there's a lot of confusion, a lot of noise, whether it's tariffs, whether it was that government shutdown at the beginning of the year, and that customers are being cautious. So you combine that with a transportation industry decline and intermodal, also weaker coal demand thanks to both the cheap price of nat gas right now and also just softer steel output, steel production here in the U.S. On the flip side, you have reasonably good housing starts, auto sales, good consumer confidence, low interest rates, low gas prices. And he says, quote, it's a difficult time to get arms around the tone and tenure right now. Now, also, CSX is contending with Philadelphia Energy Solutions, closing down the largest East Coast refinery. They moved a lot of crude by rail to that refinery. It accounted for about 1% of overall revenue at CSX. And you put it all together, and this is why the freight railroad has become so much more cautious. It's gone from a full-year revenue outlook of up 1 to 2% to now down 1 to 2%. Also, just note, you got a record operating ratio that was below 60%. Foote saying they'll keep working to wring out costs and bring that as low as it can go. But the bottom line here, the read-through on the economy, since the rails do touch so many different goods that are moving around the U.S. and North America, really saying, quote, overall, clearly the economy is not as robust, but it's also not the end of days either. Nonetheless, shares of CSX are down almost 12% right now, and all the other freight railroads that are publicly traded, Kansas City Southern, Norfolk Southern, Union Pacific, also the Canadian names are trading lower in sympathy as well.